It's no secret that the economy has been struggling recently. There's been record high inflation and massive supply chain shortages. The overall stock market hasn't been doing very well either. This has many people concerned that a recession is imminent. Large institutions like Bank of America, Deutsche Bank, and Fannie Mae have all issued statements predicting an upcoming recession for the US economy. While the severity of this upcoming recession is debated, it is starting to seem inevitable. This has many people looking for a safe place to park their money. Typically, investments like gold and bonds are front and center, but Bitcoin is stealing a lot of that attention. The interesting thing about Bitcoin, though, is that it has never been through a major recession, so exactly how it would respond isn't really clear. Bitcoin was created in 2009 as a direct response to the Great Recession. The only time that the United States has gone through a recession since then was in early 2020. This recession was due to the start of the COVID pandemic and all the lockdowns that followed. While very scary at the time, this recession was extremely short-lived due to the excessive amount of money that was printed. During the 2020 recession, Bitcoin took a very bad hit. At the start of the pandemic, it actually lost 50% of its value in just a couple of days. However, because those money printers were turned on, Bitcoin along with many other investments recovered quickly. That won't be the case this time. Actually, the opposite will basically be happening as the Federal Reserve will attempt to slow down the economy to fight inflation. This means the possible 2022 to 2023 recession will likely be much worse than the last one. As I mentioned, the debate of exactly how bad is still ongoing, but there are many indicators that are somewhat concerning. First, you have inflation that is at its highest rate since the early 80s. As of March 2022, we are currently sitting at an inflation rate of 8.5% in the United States. Typically, the Federal Reserve aims to keep inflation at around 2%, so to say inflation is out of control is definitely an understatement. There are also a ton of supply chain issues. Everything from common grocery store items to wood and steel have been in short supply. While many expected these problems to go away after the initial lockdown in 2020, they never did. These persistent shortages have caused prices to climb, adding to inflation. There have also been a ton of other issues that just keep piling up and adding to inflation pressure. This obviously is very bad and has Jerome Powell, who is head of the Federal Reserve, very concerned. He has made it very clear that the Federal Reserve is interested in doing whatever is necessary to get inflation back to that 2% target.
The thing I want to say, though, is we really are committed to using our tools to get 2% inflation back. So inflation is much higher now, and our policy rate is still more accommodative than it was then. So it is appropriate, in my view, to be moving a little more quickly. And I also think there's something in the idea of front-end loading whatever accommodation one thinks is appropriate. So
clearly, Jerome Powell is willing to take whatever steps necessary to make sure that inflation is not a persistent issue. This would include rapidly raising interest rates to slow the overall growth of the economy. The goal with raising interest rates is to slowly get inflation back down to acceptable levels. The hope is that they can slow growth in the economy enough to help ease inflation without causing a recession. The only issue is that with how high inflation currently is, we are likely to see the brakes slammed on much faster, thus putting us into a recession. So how would Bitcoin do under this scenario? Bitcoin is often called digital gold, since it's similar to gold in many ways. They are both assets that can't be controlled by a single institution, and they get their value because of what they are, and not just because a country says that they have value like with traditional currencies. This is important because gold is usually seen as a safe asset in times of uncertainty. This means it typically performs very well during recessions. Between 2008 and 2011, the price of gold increased by over 87%. Compare that to the S&P 500 during the same time frame, where it actually lost 13% of its total value. So when things go downhill, people often want to be in gold. Now that Bitcoin is also around, many investors are looking for it to be another safe haven asset. Bitcoin gets its value in a similar way to gold, so it may react the same during a recession. Potentially, it could even perform better. Some even believe Bitcoin is already starting to take the top safe haven asset spot away from gold. Bitcoin has been a much more niche investment until the last few years. In 2020 and 2021, Bitcoin caught a lot of mainstream attention that caused a lot of new investors to become interested in it. Because of this, many who would have turned to gold may now look to Bitcoin as a way to keep their money safe. Many large financial institutions are acknowledging this shift as well. Both Goldman Sachs and JP Morgan have released statements mentioning that Bitcoin and gold are direct competitors in the store of value asset class, meaning as Bitcoin continues to catch on, gold will likely lose market share to it. However, there are some who disagree with this claim. Recently, Bitcoin has been tied extremely close to the overall stock market. This isn't a good thing because the market has had a rough 2022. As of now, the S&P 500 is down over 12% for the year. As a result of this correlation, Bitcoin is also down a significant amount. If a recession were to hit, stocks would definitely drop a lot, but how much exactly depends on the severity of the recession. This means Bitcoin would follow, and it wouldn't be a much safer bet than just being in the stock market. All of this also shows that Bitcoin hasn't been a proper hedge against inflation as many anticipated. Gold is up 4% for the year, while Bitcoin is down over 15%. However, some believe Bitcoin's correlation with the stock market will be short-lived. Bitcoin's current correlation with the stock market is the highest it has ever been, meaning this incredibly close correlation to the market is not the norm. For many years, Bitcoin wasn't correlated to the overall market really at all, but in the last several years it has seen that steadily increase. This is probably due to the fact that mainstream adoption has rapidly been increasing since 2020, leading to many new investors discovering Bitcoin and treating it more closely to a traditional investment. This does make sense. Bitcoin is a new type of investment that has been around for just a little over a decade. Many longtime investors might not really know what to make of it yet. After all, it is historically a fairly risky investment. So as more uncertainty builds in the market, investors decide to sell some off in case Bitcoin has a massive crash. While it makes sense to sell off for those who are more risk adverse, it does feel like they are missing the whole point of Bitcoin. Bitcoin was created as a response to a recession and is meant to be a hedge against poor decisions made by centralized institutions, like banks and governments. So theoretically, it should outperform more traditional investments during a recession. If we do go into a recession, people might start to look more deeply into the fundamental ideas that Bitcoin encompasses, causing it to maintain or even increase in value while the rest of the market falls. The truth is, nobody knows exactly how Bitcoin or any other investment is going to react to a recession. There are so many things we just don't know, so it's hard to make a true guess about how Bitcoin would actually react. We don't know how bad an upcoming recession could be, or if there even will be one. The main thing is that a recession won't change the fundamental ideas that Bitcoin encompasses. If you liked Bitcoin as an investment a year ago, there really won't be any reason to dislike it during a recession. Bitcoin really isn't about the short-term gains it can bring. It's about creating a decentralized and uncontrolled way to do money. No matter what happens with Bitcoin during a possible upcoming recession, it's bound to be a bumpy ride. There will probably be a lot of ups and downs as investors try to figure out what the heck is going on. The main thing is to make sure that you are doing proper research and preparing yourself for any possible outcome, which if you are watching this video, you're probably doing just that, so good job.